Bloomberg Audio Studios. Podcasts, radio, news.
Let's talk more now about how the country plans to navigate this trade environment and the markets as well, of course. Afsaneh Beschloss is CEO and founder of Rock Creek Group. Afsaneh, we have to wait and see if this market reaction holds, but for now it appears the market wasn't expecting anything this seismic, let's say. We have, quite a strong move in currencies and equities at their session lows. What is now your base case on trade for August 1st?
You're absolutely right, Vonnie. The market expected something closer to 15 to 17% in terms of the average tariffs that would be getting sometime end of July 9th or some point later. So the 25 number is a little bit up there versus the 17%. So I think the market is gradually getting adjusted to this, but the fact that there's this choppiness and there's this uncertainty about, one, the dates, two, the amounts, three, to some of our most important trading partners like Japan and Korea, does create a lot of impact, I think, on the markets going forward. And we should expect the choppiness that we've seen over the last few days to probably continue. Maybe not April scale, but certainly to continue.
There will be bouts of volatility already. The VIX is up to just around 18, so nothing panicky just yet, but we need to keep an eye on that, right? And we obviously need to watch for Japan's response. But what would you be doing in this environment, given that there's only perhaps so much that Japan can do now?
So I think one thing is that, if we assumed that we would go back to that sort of average, even 17%, even that is a very large tax on consumers, right? Because at the end of the day, the consumers will be paying a large share of that. So with that scenario, if you're assuming that U.S. growth will be a little bit slower based on that, we have to obviously wait to see what the earnings reports are that are coming out. But what has been happening already, the kind of outflows that we saw from the U.S. equity markets did continue in Q2, as we saw in the numbers that came out last week, about 30-some billion that came out of U.S. equities. Some of that went into small cap, some of that went into international markets. Bond markets saw a flow. Interest rates could be coming down sooner, potentially in September, Vonnie. We thought that they might be coming down later at the end of the year in 2025. Now there's a scenario if we're slowing down potentially, we might see interest rates come down, which also has impacts on the dollar. So what does that say in general? Diversification away from U.S. assets over time, not one big swoop, but over time.
Yeah, we're seeing the 10-year yield now at 4.3873. It had been dropping ever so slightly just after we got the tariff announcement, but it's back at the level it was at before those letters went out. And bear in mind, these are just letters, right? We're waiting for a lot more before we know what's actually going to happen. We had Meb Faber on last week, and he made the point that, look, valuations are very, very rich right here. Perhaps we can have a listen to what he had to say.
Could just last 15 years come on the show, say buy SPY, go away, right? But here we are, and U.S. stocks are now expensive. We came into this year, we tracked 45 countries. U.S. stocks, for the first time, we've been tracking this for, I think, a decade. U.S. stocks ranked the most expensive stock market in the world.
So if we are the most expensive stock market in the world, and yeah, sure, breadth has been improving and so on, nevertheless, we are at these levels, and we're potentially going to get some detrimental tariff impact. Where is there to hide?
So U.S. stock market is what, about 2/3 or a little bit more than 2/3 of the total stock market. About, 10 years ago, it was maybe in excess of 50%. So it is sort of the overwhelming part of the market. Europe, added together. Japan, we just talked about Japan. The rest of the world really are the rest of the equity markets. What we saw, some of us remember what happened to Japan when Japan's stock market reached a very big high, and it took a very long time and then it collapsed because of very bad economic policies. I'm not suggesting that's going to happen here, but I'm suggesting that U.S. equity share in people's portfolios has started to go down slightly, and every institutional investment committee is looking now at other asset classes, be it European securities. They might have obviously better price earnings ratios, especially if they are oriented towards domestic markets, Japanese stocks that are oriented towards domestic markets, emerging market stocks similarly. So I think people are starting to look at those kinds of assets, bonds in other countries similarly, as well as gold. Gold has already reached 3,000, but it could be, reaching a point under 4,000, because central banks that saw U.S. dollar as a safe haven may not be seeing it as safe haven, and little kids are taking their mothers to Costco to buy gold bars. So you see that people who never thought about anything but the U.S. dollars, from the kid on the street to the central banks, are starting to think, while U.S. dollars are going to be predominant, they will stay predominant in their portfolios, will not have the same size. So I think that will be important. And one last point is people are doing FX hedging, particularly institutions, so that even if they are, despite rich price earnings ratios, they want to stay in certain U.S. stocks will benefit from AI. They are doing the FX hedging to reduce their U.S. dollar exposure.
Afsaneh, last time you were on, which is April, you were saying that Vietnam would be an important one to watch for the impact that it would have on China, whether it would, pick the U.S. over China or what China would do in response. Do you have any further thoughts now that we have some kind of a deal with Vietnam on what this means for China's relationship with its partners, bearing in mind that we had Trump put in these letters about transshipments, and he's obviously, cracking down on that now as well?
No, I think transshipments is going to be a very big deal. I think Vietnam is a beneficiary. As you said, they did make one of the first trade deals, and they will continue to benefit. But the size of the Vietnamese market at the same time, let's just be frank, is not huge. Even if it expands, it's still going to be a tiny market. So it's not going to be life-changing for anyone. China has surprisingly been quiet in the last few weeks. It was sort of very bolstering in the early days. It's been quieter. So it will be very interesting to see how whether a letter is going to China. Particularly, we saw that 10% extra potential tariffs on countries that are negotiating together as part of the BRIC group. So that will be interesting to see whether the letter to China has the 25 plus a 10 or whatever other numbers come up.
All right, we have to leave it there, but our thanks to you, Afsaneh Beschloss, CEO and founder of Rock Creek Group. And I just want to point out that the ADRs of Japanese automakers are now at session lows as well. Toyota and Honda down 3+% apiece.